I think we're just coming up on noon, so we're going to get started. My name is Simon DeMontfort Walker. I'm the EVP of Operations here at Blue Cod, and I'm joined by Nyan Dordan, who's our Product Offerings Manager, who's actually going to lead our discussion, and I'll hand over everything to her in a moment here. Just a couple of housekeeping items for everyone that's on the phone. During the session, submit questions into Karen Reagan. You'll see her as an attendee in the WebEx, and you can just pull that drop down that's at the top of your screen, pull it down, and submit the questions to her. And we'll leave time at the end of this for those questions, so just submit them throughout the session. And when we get to the end, we'll have that discussion. And just so everyone's aware, Blue Cod Solutions is obviously extraordinarily focused on CEA, and this is part of our commitment to partnering with CEA and partnering with PIs to improve how we serve policyholders in California. At this time, please introduce Nyan, and I'd love to bring in our presentation.
Thank you, Simon. I would like to say good morning and good afternoon to those of you who are in a different time zone here, and add my welcome along with Simon. And we're really, really glad that you took time out of your busy schedule in order to join us today. So we're going to talk a little about the CEA's rate and forms change that was effective on 1/1/12, as well as the pending Homeowners Choice product that's to be effective on July 1, 2012. We'll talk a little bit about the challenges that these implementations posed for participating insurers. And having worked for a participating insurer prior to joining Blue Cod, I understand what it's like to walk in your shoes. The CEA was the answer to a potential economic disaster in California. And if you're a participating insurer, I know I don't have to tell you the value that the CEA brings. Because of the great job that the CEA does, each of you is able to continue writing your own homeowners insurance in the state without that entire earthquake exposure looming over your company. So we'll briefly touch upon future CEA product changes, in particular the Homeowners Choice product, and we'll provide a few tips that will help ease you through the change. We'll then explain the Blue Cod CEA solution so that you will know what we have available to help you in your solution. And at the end of the webinar, as Simon mentioned, we'll have time for some questions and answers. So with that, let's get started. For a little bit of history, in January 2011, the California Earthquake Authority announced rate and forms changes to their residential earthquake insurance programs. And these changes are effective on January 1, 2012. The CEA also introduced a new product called Homeowners Choice. The original proposed effective date for the Homeowners Choice product was also January 1, 2012. But due to the feedback from many participating insurers, the California Department of Insurance moved the approved effective date to July 1 for 2012 for just the choice piece. So the 2012 rate and forms changes were the first significant rate changes that the CEA has made since 2007. And the CEA's goal is to increase the number of Californians with earthquake insurance. The CEA anticipates that with the overall statewide rate reduction of 12.5% and the improved product value, that more customers will purchase the CEA earthquake product. With the introduction of the CEA Homeowners Choice program, the insured will now also have more control over their earthquake premium, which also could help drive up the CEA earthquake policy sales. In order to comply with the 2012 CEA product changes, every participating insurer had to update their rating, claims, policy processing, and reporting systems to accommodate the 1/1/12 rate change. Blue Cod estimates that there were over 30 required changes. And I'm sure you're all very familiar with those changes because you've probably already implemented them. But in addition to the statewide overall rate decrease of 12.5%, some of the most notable changes are listed on this slide. I'm not going to go through them, but they are good changes. They improve the product and adjust the pricing where it's actuarially sound to do so. So what were the most challenging aspects of the changes? Well, It's a struggle for many participating insurers to allocate the employee resources that are needed to meet the CEA deadlines and requirements without disrupting critical business operations. The most challenging aspects of the new CEA product changes are the form changes, the introduction of new products, the rating methodology changes, and the Epicenter, formerly called NEIC, reporting requirement changes. The CEA 2012 rate and form changes have impacted all 17 participating insurers. These changes have been challenging and costly for each PI to implement. The 7/1/12 implementation of the system changes for the choice product will also require additional resources from each participating insurer. So let's talk about Homeowners Choice for just a minute. And again, the goal here, the Homeowners Choice product was designed to give California homeowners additional earthquake options, again, with the idea of giving people, helping more people purchase earthquake insurance. So both the availability and the affordability of the earthquake product has been addressed. As far as coverage, rating, and forms changes, excuse me, the insured is given more options. Coverage A is mandatory, but coverages C and D are optional and may be purchased separately or in combination. Your systems will likely need changes to allow for this. The rating algorithm is different for choice than for the basic program as well. The unbundling of coverages could make purchasing earthquake insurance more affordable. An insured may purchase only coverage A and at least protect his or her home and keeping the premium down in the process. This empowers consumers with more control over their residential earthquake insurance premium. The deductible is another consideration. Under the basic program, the coverage A deductible must be met before there's any coverage available for personal property or coverage C. For the choice program, the insured will have the ability to select either a 10% or 15% deductible for personal property. This means that coverage is available for coverage C even if the coverage A deductible has not been met. However, the coverage C personal property deductible is waived if the coverage A dwelling deductible is met by a loss by covered structural property. So this means that insureds will have more coverage options and more immediate benefits after an earthquake. This also means that most of the PIs out there will need to add a new field, policy type, to their systems. A new coverage C deductible field will also be required to capture and report whether the deductible was met in coverage A dwelling and coverage C personal property. Perhaps changes will be needed to your claim system to ensure the appropriate application of the deductibles and for the new reporting to Epicenter. The new choice product also brings with it new forms. There's a new application. Form BEQ3C must be attached to all new business or rewritten policies. The choice product has its own declarations page, which is different from the BEQ3B declarations page that we all just implemented. We've been told by the CEA that offers must continue to be made with the minimum limits required by the regulation. So using the basic program for quoting will meet the requirements under the regulation, but you could also meet the regulation requirements by quoting minimum limits under the choice program. Quoting the same limits under both the basic and the choice will result in the choice program being more expensive, but that's as expected due to the improved personal property coverage deductible application and the fact that the basic program includes a built-in bundling discount. You may choose to update your offer letters to include a mention of both basic and choice programs to ensure that the policyholder knows that these options are available, but there's absolutely nothing in the regulations that require you to do so. As far as the timeline is concerned, the participating insurers felt that the Homeowners Choice product implementation date of January 1 was not feasible. Many PIs believed that there was too little lead time provided to plan, budget, allocate resources, and perform the work required for this complex project. But the CEA had been communicating for a long time that a major change was in the works. But in the end, only 6 of the total 17 PIs were able to commit to the January 2012 implementation date, which led in part to the California DOI's decision to postpone the Homeowners Choice implementation to July 1, 2012. The Homeowners Choice product must be implemented by the end of April or early May, depending upon how far in advance your company will write a companion policy. Excuse me here. So what are some of the challenges for participating insurers? Of course, each time the CEA initiates a rate or policy change, each participating insurer must make those changes to their policy processing systems and their workflow in order to meet those new requirements. This is a costly and time-consuming process for each participating insurer. Many of the PIs have to deal with making these changes in aging legacy systems, which we all know adds a lot of time that it takes to make the change. And then there's the implementation costs. The CEA, in their meeting minutes from the June 30th, 2011 Governing Board meeting, reported that participating insurers variously estimate the cost of bringing the current, new, and better coverage to the policyholders at between $400,000 to $700,000 per company. We all understand that is a lot of money to spend on systems work for a product that isn't considered to be core to your business. And then there's resource concerns. When you decide to modify your systems and processes to make a change that will impact your company's core business, your requirements are generally easily understood and documented. You know what you want to change. Your benefits and costs are readily definable, and the prioritization and resourcing of the work fits well into your company's standard operating processes. The CEA product changes, while necessary, do not always fit so nicely into the standard way of doing things. CEA changes are often referred to as compliance changes. Changes must be done, but they take resources away from the core business. Though, as mentioned, the January 2012 CEA rate and forms changes and the pending July 2012 Homeowners Choice product changes, they are the first significant changes required by the CEA since 2007. And though most PIs agree that the changes are good ones to make, these changes may still cause considerable disruption to a PI's core business. The focus of your California product managers, your business analysts, testers, and IT staff that are normally dedicated to supporting your core products must be diverted to working on the CEA changes. Costs to implement are high. Retraining can be expensive and time-consuming. So what is the future of CEA product changes? Well, we don't really have a crystal ball here, but we know that as part of the January 1, 2012 rate and form changes, the CEA is moving to a new reporting system called the Earthquake Policy Information Center, or EPICenter. This new reporting system will provide the CEA with much greater analytical, submission, and error correction capabilities, and generally make it easier for the CEA to generate new product models and rate and coverage changes. The good news for the CEA is that they have a dynamic reporting system that will allow them to do what all good companies do. They're looking for ways to improve the product for their policyholders, which will ultimately result in more Californians purchasing earthquake insurance. But with this flexibility may come more ongoing maintenance for the participating insurers. The CEA has commented that they are currently exploring a broader hazard mitigation discount for a future filing, and this will hopefully incentivize policyholders to retrofit their homes. And although nothing has been communicated on this yet, just as you have periodic rate changes and improvements for your core business, I certainly think it's reasonable to expect the same from the CEA. So the potential impact to participating insurers will mean that you'll continue to have ongoing management challenges and implementation costs for all of the participating insurers. So here are some tips that might help ease you through the process. The first one is to understand the changes. Now, we mentioned the major changes previously, and again, you need to think about these changes and how they impact your system. The major changes are the addition of a new policy type code that will need to be captured and reported to Epicenter. Coverages C and D are now optional and can be purchased separately or in combination at the insured's option. A new deductible must be added for coverage C, and this could have implications to your entry, claims, and reporting systems. The rating algorithms have been modified, including changing from a rating factor to a premium value that varies by deductible for coverage C. And a new application, Declarations and Policy Form, BEQ3C, is being introduced. Now, each of you has processes and systems that work differently, so you each need to think about quoting, policy entry, rating, policy forms generation, offer generation, claims, Epicenter reporting, and possibly even agency download and your own reporting. We suggest that you think about change control a bit differently. I'm sure that each of you has a very good change control process in place, and all of you are aware that change control is different when there's a third party involved. In order to make the date, most of you, if not all of you, have already started on your project, or you'll begin on it shortly. It's possible that there may be additional changes to the Homeowners Choice product requirements, as there were for the January 1, 2012 rate and forms changes. The final revision of the Epicenter technical reporting instructions was received on December 2nd. Blue Cod received the final version of the CEA rating manual and the BEQ3C form and declarations page and the application last Thursday. So now that we have the final versions, the detailed review can begin for all of us. So there will likely be questions and possibly clarifications. Now, the CEA does a great job getting back to us on questions that we have, but all of this means that we need to begin our projects now in order to make the date. But there's always the potential for changes down the road. And I'm sure that all of you have had projects where you decide that a change is needed after the project is begun. So for your core business, you generally have a choice on whether to include the change within your project or save the change for a later release. And my opinion is that the CEA is doing the right thing when they make the changes. Often the changes come about as the result of feedback from you, the participating insurers. But unlike your own projects, where you can make a decision on whether or not to include a change, any modifications or clarifications to your understanding of the requirements that are made by the CEA will need to be included in your project. So being aware of that in advance and having a strong change control process in place will definitely make your project more successful. We also recommend that you prepare your testing based on Epicenter reporting. There are several required changes to Epicenter that we've talked about. In addition to reporting the policy type, the new coverage C deductible will also be required for both premium and claims transactions. For the January 1 Epicenter reporting changes, each participating insurer was required to obtain certification by the CEA by sending through a specified list of transactions. And I've been told by the CEA that certification will also be required for the Choice product, so you'll definitely need to do testing with the CEA. Preparing your test cases with the ultimate reporting of the certification test cases to Epicenter will actually end up saving you time in the long run. And the CEA also generally provides rate calculator sheets and test plans that are really, really helpful and can save you time in your test case generation. And then there's communication and training, which will be important components of a successful implementation of the Homeowners Choice product. Your data entry, claims, customer service, and print and distribution teams, as well as your developers, quality assurance analysts, and especially your agents, will all require communication and training on the new products and its features and benefits, as well as any changes that you're making to your systems and workflows. Your agents need to understand that although the Choice product with its coverage options are available, the regulations still require that in addition to coverages A and B, that coverage C and D must be offered to the policyholder. So let's talk about the Blue Cod CEA solution. The Blue Cod CEA solution is a managed insurance services solution that is tailored to the needs of CEA participating insurers. So insurers that partner with Blue Cod to manage their CEA business benefit from our broad property and casualty industry experience, as well as Blue Cod's expertise specific to CEA processing, integration, and architecture. Our solution enables the PI to offload CEA support functions and focus on their core business. Our CEA solution includes processing for new business, biennial, and renewal offers, full policy processing, premium services, customer service, document imaging, print and distribution services, and epicenter reporting to the CEA. Because Blue Cod maintains the CEA rating algorithms and forms for each participating insurer, the resources and costs required of each PI to implement a CEA product change are greatly reduced. All 4 of Blue Cod's CEA participating insurers went live on time in October with the 2012 rate and forms changes, and we will go live on January 1, 2012 with the related claims changes. And all of this was done at a lower cost than they could do it internally and with limited disruption to their core business. The standard solution can be modified to suit individual participating insurer needs. As mentioned, our standard managed insurance services solution for CEA participating insurers encompasses all offer and policy processing, rating, reporting, and servicing needs. But each participating insurer does things just a little bit differently. From a small book of business, which would encompass a lot of manual processing, to a huge book of business with a fully automated solution, Blue Cod can meet your needs. While we try to maintain as much consistency as possible between the participating insurers in order to keep costs down, we understand that each company may need to do some things differently from the others, and we can and will accommodate your special needs. We currently have 4 participating insurers who benefit from Blue Cod's CEA solution. We know the CEA business. We've been successful in processing for our 4 participating insurers. We have the experience, the expertise, and the technology. So a little bit about our solution, some more details here. Our base out-of-the-box solution includes offer processing, rating, reporting, and servicing. And as mentioned, we can perform and do all of your CEA offers processing for you. We process all participating insurer new business, amendment, renewal, cancellation, reinstatement, and non-renewal transactions. Blue Cod maintains all CEA rating rules and algorithms on behalf of the participating insurers. We provide comprehensive customer service, and this would include full phone, mail, email, and fax support, and this can be for policyholders and or agents, as well as return mail processing, complaint handling, and bilingual services. At the discretion of our participating insurer clients, we can actually be invisible to agents and policyholders, because each of our clients has their own dedicated 800 numbers and P.O. boxes. Blue Cod performs all participating insurer payment processing, including full lockbox services, payment reconciliation, premium and claims check generation, and write-offs processing. We can print and mail all offer letters and policy documentation, including generating event notices when required. All policy documentation and correspondence received from customers, agents, and lien holders is imaged and stored electronically. Agents and adjusters can be provided with policy inquiry and first notice of loss capabilities by Blue Cod's Alternet web portal. And as part of our fully automated solution, Blue Cod maintains what we call a companion policy shadow book for each participating insurer. And this is simply a mirror image of your companion policy fields that are needed to offer, rate, issue, and report a CEA policy. And we use this shadow book to ensure that that companion policy and the CEA policy constantly remain in sync. Blue Cod provides all required epicenter reporting for premiums and claims. So we take on all of the reporting and handle all error identification and correction. We know from talking to several current participating insurers, and actually from our own experience, that the error correction process can be time-consuming and complicated. And Blue Cod performs an annual catastrophe drill with the CEA for each participating insurer. Blue Cod was the first company to perform a CAT drill with the CEA, and we found our yearly drills to be an important practice to ensure that our participating insurers, the CEA, and Blue Cod will all be ready to properly service our policyholders when and if that big event happens. Blue Cod can also provide additional optional services to meet your CEA solution needs. In addition to the standard CEA solution, which we've already talked about, Blue Cod offers a multitude of optional services to PIs. These services include such things as agent web portal for quoting and policy issuance, first notice of loss receipt and entry service, enhanced features and functionalities for agents via Blue Cod's Alternet web portal, and this would include such things as making policy documents available online and having alert capabilities for communicating to agents. We can handle the conversion of the insurer's existing CEA book of business, making it easier for the PI. Transmission of the document images to the insurer's imaging system rather than just maintaining it on our own. It's cheat services, credit card and e-check acceptance and processing, and automated mortgagee notification. Standalone products such as web services solutions for rating, rent, and quoting are also available. So there is an alternative to managing your CEA business in-house. The Blue Cod solution for CEA for participating insurers offers dedicated Blue Cod staff with CEA expertise. It will allow you to offload much of the responsibility for this business to your internal resources, or from your internal resources to us, and allow your internal resources to focus on the projects that are important to your business. Blue Cod is also able to spread the cost of a CEA product change over a number of participating insurers, and this will reduce the cost for all. So at this time, I'm going to turn it back over to Simon, and between the two of us, we'll answer any questions that you may have submitted during the webinar.
Many, many thanks, Diane. So we've got a few questions that have come in already, and if anyone has any others, please just submit them, as we said, to Karen Reagan directly on the WebEx. So we'll take a few minutes and just talk through a few of these. We'll hopefully have time to get through to everyone, and then if not, we can always do some follow-ups after. One short reminder for everyone, there's also a white paper that we'll make sure that everyone on the phone gets a copy of after the session as well. So the first big question we got in was, from our perspective, what are the most challenging aspects of the implementation going to be going forward?
Well, I think that the most challenging aspect of the Homeowners Choice product is that it's a big change. So the rating algorithms, the forms, the new fields, the needing of the ability for agents to quote and submit both basic and choice, all of these factors combined are going to make it quite a challenging project. But we just successfully implemented the 1112 rate and forms changes, and I believe that that project was equally as challenging.
Okay, great. The next question we got in was, when an insurer chooses to partner with Blue Cod, what responsibilities does the insurer retain in regards to earthquake and the CEA?
Okay, well, one thing we have to point out is that the contract with the CEA is between the CEA and the participating insurer. It's not between Blue Cod and the CEA. So the participating insurer will need to communicate changes from the CEA to Blue Cod. And in addition, when there are changes, the participating insurer must work with Blue Cod to approve any requirements that are common to all of the participating insurers, and to specifically provide any requirements where the participating insurer does something that falls outside of our base product. And, for example, when forms are revised, Blue Cod will send copies of the revised forms to the PIs, who in turn will provide the copies to the CEA for approval. And depending upon the level of automation that the participating insurer chooses, there will be files that must be built and sent to and received from Blue Cod. So as mentioned earlier, each participating insurer is going to be a bit different, and we're available to discuss your individual situation.
Great. And I've got one final question, so if anyone's got any others, please just, again, submit them through to Karen Reagan on the messaging tool in WebEx. Once an insurer chooses to partner with Blue Cod, what is the typical length of time it takes to implement to get through to a full CEA solution? So, I think the answer to that is really it depends upon levels of automation and levels of the product we actually implement. We've got some clients who we've done in less than 3 months, some certainly more than that. It really just depends on whether it's a sort of a base product which we run or something that's far more customized, and then frankly, if it's also some of our core standalone solutions. So if there's no more questions, listen, we thank everyone very much for joining us. If you've got any questions, please reach out to Linda. Her information is up on the screen right now. She manages all of our CEA clients. Her email as well as phone numbers are available for you there. We will follow up with everyone with a copy of the white paper. And please, thanks for joining us, and let us know if you have any other questions offline. Thanks very much, everyone.